Hello everyone and welcome to today's No FOMO Charts Crypto and Stocks TA Charts video. Today is May 28, 2024. This is a technical analysis and education video for swing trading and investing. I am No FOMO Charts. My social media handles at No FOMO Charts on YouTube, X, TradingView, and more. Let's get started with crypto. Total crypto market cap, we are consolidating right now on the daily chart going sideways inside of a symmetrical triangle. The move is plus or minus 3%. Plus 3% would take us to about 2.5 trillion. Minus 3% would bring us to about 2.4 trillion. Some targets there for resistance and support. Remember, this sideways move is because the Ethereum ETF was only preliminary approval. The Ethereum ETFs are not listed or trading yet, so we're just waiting for that. The upside down head and shoulders target from the beginning of May is plus or minus 8%. We did go 8%. Next target is 2.7 trillion on the top side. So as long as we hold above 2.4 trillion, we're okay in this high, low pattern. If we break down, have a lower high, and then have a pullback in, let's say, the next 2 weeks to 4 weeks, that would be a major problem. We are starting off this week with a shooting star / Doge. Last week, we have some profit taking on the top side. So we just need to make sure this week does not close as a Doge or shooting star, and we should be fine for this week as well. Let's go to Bitcoin. Similar analysis. So again, it's only preliminary approval for the Ethereum ETFs. And we want to make sure, just a reminder, Bitcoin right now is at the all-time high price of around 70,000. Stocks are also at all-time high prices for many stocks and the indexes. So any bad news that comes out could pull back this asset, the market, Bitcoin. So over the weekend, we had a holiday weekend and we had the Mt. Gox wallet transfer scare. $9 billion of Bitcoin worth moved between wallets, and that spooked the market, and we had a 1 day of sell-off. And then they released a statement and we had a rebound. So just understand that anything that happens with the SEC, that's bad. Crypto exchanges, any hacks, major arrests, or major sell-off from institutions or whales, that could all trigger a downtrend for Bitcoin sell-off. So where's the support level? 66K, 65, 62, 60,000, 55. We definitely do not want to fall below 60,000 or 55,000. We're still in a holding pattern, high, low, high, low. As long as this support holds, we could try to boost off to about 75,000. We must break above 75,000 and hold to have a good rally on Bitcoin. Next up, Ethereum. Like I said, we only had preliminary approvals, which is why we didn't have a blast off rally. The double bottom / inverse head and shoulders was real. We went about 20%, so double the target, and that's why we had some sell-off and some volatility as well. And remember, it's just preliminary approval. Could take weeks or maybe months for the rest of the Ethereum ETFs to approve. So if we have a pullback, I would not be surprised about that. Current support is 3,600, 3,500. We have to break and hold above 4,000 to really get people excited about the market. Binance coin in an ascending triangle at the top of its move for 2024. So this is about a 10 to 12% move. And the target to the upside is about 694. Target to the downside is 535. And it is correlating with Bitcoin slightly. You can see it, the pullback that happened the past couple of days. So if we have a breakout above, let's say 630, and we hold above that, probably going to target this to the upside, pending any Binance news. Solana is a competitor to Ethereum. It competes with Ethereum, so that's why we had the sell-off. If Ethereum is going up, Solana might be inversely correlated for some time now. So as long as we hold the support above 160, we're still okay in this upstairs pattern. See if we can hold that and try to get the next bounce. However, if this fails and crashes, you can see the larger symmetrical triangle is building up, and the next level of support down is about 145. We cannot lose 125 as bulls, or else the short downtrend will continue if that happens. XRP actually fell down below the support trend line of 56 cents here. and currently going sideways. So in this measured move, it's about 15% plus or minus as a longer term swing trader. So 60 cents or 45 cents to the downside. So I'm very closely watching that break. There is some rumor about, Solana or XRP ETF, but that hasn't come true yet. So now what I'm watching for is, are we going to bounce up to about 60 cents or not? We need to rally back into this. If not, if we stay down here, I'm actually forecasting maybe a 40-cent move. Excuse me, not 40-cent move, but a about 10-cent move to the downside back down to 42 cents, because there's just no catalyst that's really propelling this to the upside yet besides technicals. Doge USDT, we had a little bit of a rally, not quite the full target. We did not go 23% to the breakout yet. So it's actually just back testing this neckline at 16 cents. Let's look at the weekly chart here. Again, we had a Morningstar pattern off of this support level, which should be bullish, but we're consolidating to start off the week. The 4 hour, if everything's still in an up cross right here in the 4 hour and the 1 hour barely. So as long as we hold above 16 cents, we should be okay. And let me highlight that in a drawing. We need to hold above this level, 16 cents, which is the neckline. It's going to take some time to see if this is going to actually bounce, maybe another couple of weeks or a month. But if we start dumping, then I'm going to sell this. Cardano, right off the bat, right off the start, we see that we are in a death cross 50 below the 200 EMA. So Cardano has quite a bit of price action work to do to continue this rally. If we turn this into a square, basically, or a rectangle, it's just stuck in there right now. So I longed this on this left side and had good profits and sold. That's just one little swing trade. Just held it for a couple days or a couple weeks and then just sell it. Because if you're an investor, I can let it move around a lot. If you're a trader, you have to have definite targets: entry, take profit, stop loss. So if this does not break above 50 cents and continue the uptrend, Cardano is actually at risk. Next, Shiba Inu. Shiba Inu holding a little bit better. Rest in peace to the actual dog who passed away, who's the mascot for Shiba Inu. That's sad news. However, in his honor, the price is still moving up here. So let's try to get this rally going on. 20% move here at 3,055 is the next upside target. So just remember, sometimes in this setup, it does pull back to 2,500 to see where exactly that goes. But high, low is still the pattern that we need to play on Shiba Inu. Link, this is the last crypto. I'm going faster here. So Link obviously had more news for it in terms of regarding some kind of bank deal or something like that. But for me, I just focus on technicals, and it did go the full almost 30%. So understand, Link is also kind of like an Ethereum competitor as well. So in terms of, I took my profit, and then it's starting to fade down already. Now, if we reset the trade, understand we hit the target already. So I'm kind of forgetting about this pattern. Now I'm focusing on the newest pattern. High, low, high. Where's the next higher low? 1727 could be a level of support, and that's validated by this resistance on the left side. Check the weekly. Not quite as weak as other coins, so we could see that pull back probably on the hourly. It's starting to hourly in the 15-minute. Okay, let's switch over to stocks, the last half of this video. And let's start off with SPY. Understand on the S&P 500 ETF, SPY, we are at all-time highs. That's why. And we had a little bit of a scare about the interest rates just a couple of days ago. You see it in the market. People, traders are reacting. If you have a bad inflation day, it's a huge sell-off. If you have good data, it's a rebound. If you have mixed data, it's sell-off and then rebound. So people are fighting the bulls versus the bears, to be exact. And for me, however, my style is I enter on somewhere like here, a lower support level or a breakout of the support. That's why. It's easier for me than trying to scalp every single candle or something like that. That's why sometimes swing trading is a little bit better than day trading, in my opinion, because if you manage the position size risk, take profit and stop loss orders, you can just leave it alone and let it go. For example, on SPY, just a little bit of education here. If I had a 2% stop loss, this is already up 4%. You could probably take some profit. That's why people are taking profit, because that swing trade is over. Now, the resistance point is just right at 533 below that. So if we do not, we've been stuck under there for almost, 10 days now. So that's not good. If you look at a weekly, the last week was a Doge candle. That is indecision in the market. That's why it means go sideways or up and down, then sideways. So we do not want this to turn into a evening star bearish pattern. That's going to blast us down or break us down to about 520 on SPY. So I clearly need to closely watch the intraday movement. If we lose the 4 hour, if we lose the 1 hour, which we're sort of starting to, we lose the 15 minute, we already lost the 5. So if we lose the 15 minute and this breaks down bearish for a couple more days, then we know to short. That's how we know. The inverse is true. If it starts rallying, the cascade, 5 minute, 15 minute rally, 1 hour rally, 4 hour rally, that's going to trigger a bunch of longs, and then I know how to buy on that. But it's at all-time highs right now, so beware. Let's go to the next one, QQQ, Nasdaq ETF, also at all-time highs, but saved and propelled by NVIDIA, which had some Elon Musk and NVIDIA news for the past 2 business days. So this is good. Now, usually Nasdaq stocks, the tech stocks, the big names, are the ones who are keeping the market alive right now. And so on the weekly, yes, we did have a little bit of sell, but there's no shooting star. So that's why tech is stronger, obviously, than the S&P 500 index right now. So next bullish target could be about 463. Pull up pivots just to get some easy levels. Can also use a Fibonacci extension like this to understand the targets. So the next target could be the 2618, which is 477, 475 as well. Now, if you use the old cup and handle target from that's been building for almost 2 years now, talking about this, that's why we're going up. So the original target from my memory should have been about 47% on QQQ, which is really large. So 40%, this is an extremely long-term target for investors. If we just keep having good earnings, that's 556. You can kind of see it that it's actually, maybe it's possible, right? Because we had this pullback, rally, pullback. If we just keep rallying, we have to have some good technical setups and charts and corporate earnings. So the next real boost might not come until next earnings season. Dow Jones, remember on my X watch list, I said, watch out for this Dow Jones shooting star, and actually called the top of this. We consolidated for 2 days, had an evening star pattern, and some bad news in the market is down 2.4%. It's the power of technical analysis, just understanding that, wait a second, we have a shooting star candle, we're going sideways, and then the sell off. So right now we have a hammer candle on the 50 EMA just above the support line. So the support zone for Dow Jones right here is about 386 to about 388. I'm going to leave this here for next time. Hopefully we don't have a breakdown, which would be really bad for the Dow Jones ETF. But for Fibonacci, this is also the 50% retrace. So the two targets are 387 and 385 before we have some kind of bounce probably, unless there's really bad news in the market. IWM also rejecting down from resistance. Resistance right here, and we're trying to see how far is this going to come down. So high, low, high, low. About the halfway point could be where the gap is, about $200. So IWM is in a golden up cross, but it's not really in a strong rally. It's really consolidating down. And it's correlating, I was going to say, with the Dow Jones right now. We even saw today, the Russell and Dow had that pullback as well. So just watch out for that. The growth stocks is not in super growth mode right now. We just rejected below the yellow box, so watch out for that. Let's speed up and end this video. So US oil, we had a nice bounce off the 200 EMA. And if we just measure this, about 3% to the upside, 3% target would be 78.45. And the mega target, 6% to that breakout would be about 81. So I had the gap up. Why did that happen? We established a level of support right off the 200 EMA. That is a definite setup that happens. Natural gas. I actually shorted natural gas and took my profit as well. So remember, natural gas, when it rallies for whatever reason, either technical or fundamental, but it's still in the golden up cross on the 4 hours. So this is probably going to attempt to bounce. Just beware of the lower high and then the crash. That would mark the intraday rally as over. But, you know, there's some certain, I longed it and then shorted it. So that's why you could play both sides on natural gas if somebody wanted to. But technicals do not always work. So this is just a example where you had a technical setup and then some fundamental news about the supply. Gold had a sell-off. I shorted metals over the past week and I had a good profit and closed out those trades for transparency. So in terms of how did I know how to do that? Well, it's getting a little bit too overbought. You could see a little bit this bearish divergence that was probably forming on the MACD histogram. You could see it like this. So definitely it happened. A pullback back down to support. So it's probably testing the level above 215 and it's going to bounce. We might get a gap fill up to 219. Just watch for the lower high and the lower low over time. I also shorted silver and closed that out well before we had the bounce. That's why if you're shorting or if you're day trading, had to be quick about it. So once I shorted on this day, for educational example, on this day, because shooting star, and then I said, all right, getting ready, gap up, island Doge, and now I'm just going to short that down. Had good profit on that, closed out, consolidated inside bar, and then we had a overnight rally testing the resistance right now at about 29.50. So unless it breaks above that, still in the short-term rally, right? High, low, high, higher, low, and then it has to try to break above that. That's what I'm saying, to initiate the next level of 31 area. So that was a little bit of a short squeeze right there. Let's go to copper. Now, copper had a beautiful rally and it did get sold off. Same play, sell off, test the 26, bounce, close that position, and we're bouncing right now. So where can it go to? The next levels, 29.80, 30.57, and 31.36 right here. High, low, high, higher, low. Try to get this bounce off, but watch out for that lower high as well. DXY, dollar currency index. Similar to US oil, not exactly the same setup, but as long as this holds above the 200 EMA, which is the red line down here, this could actually turn into a higher low. And if the stock markets pull back, this can actually propel the DXY higher. So next level up that I'm looking at 105, 105.05, 105.50. But if we have one more leg down, that's actually normal too, because then that'll establish a double bottom. So the support level to the downside 104 to 104.20 to 104. Now, just to close off the end here, just to some of the more meme stocks, I'll just do Gamestop and the cannabis MJ ETF. So Gamestop, I called this setup and talked about this setup almost 2 weeks ago. What was I saying? Saying that watch out for the support play bounce. And then did that happen? It did happen. Had to wait about a week or two, but it's exactly what I was saying. If you hold a support level right here where I marked, you could get the bounce, right? You can try playing it here to get the bounce, and there's for day traders, but for the swing traders, played that 4 hour, and we had the beautiful bounce of the 25 to 30%. Now, you just want to watch out for that not getting rejected down from the pivot, and then this is the lower high, and then just pulling back to 20 or 17. So watch out for that. Support is critical. 22, the next gap up of or gap down of the morning. Because on daily, it's just a doji. Okay. Doji, potential morning star, but on the weekly, but on the daily, it's just a support play bounce. So wherever this lower high is going to establish is the next short opportunity, wherever that happens. Similar play on AMC if you want to know. It was a similar play. But for AMC, I watched this for many days as when I was trading. Is AMC did not really test the daily or the 4-hour 200 EMA. I tested the 1-hour 200 EMA, if that makes sense. So it played a much shorter term support level is what I'm saying. And consolidating right now. Now, just watch out for this pattern, because if you know this pattern, high, low, the rising wedge, it's very like low angle slanted, but if this doesn't really break out, it's going to crash someday, right? So just watch out for that. Not all of these supports is going to work. So just watch out for that on AMC. Let's end this with the MJ ETF. Unfortunately for MJ, the descheduling both by the DOJ and potentially the federal government or parts of it here in the USA, it's not enough. It's not a full descheduling. It's not a full legalization yet. Yes, about half the states in America have recreational or medical marijuana cannabis use legalized, but it's only about like 50%. So until we get more legalization in states or federal government mandate for like a federal legalization, we're not going to have the mega rally. But if you're only playing technicals, so aside from the news, which I'm trying to tell people about to focus on, aside from the news, we've seen this MJ ETF and MJ stocks lose the 200 EMA. So I'm not going to get super excited that this is right around the 200 EMA. I need to see it at a super support level. So I need to see it kind of poke out below this Bollinger Band. I need to see this fall down to about 335 or 320 to get this really excited. Low, high, super sell this off, then play that one bounce if you're trying to trade it. If you're trying to invest in this thing, which as of now is not the greatest investment. Weekly, we had that double top, by the way. So let's be careful here. 15% to the downside is the weekly move. If that happens, you want this thing to get really oversold before you try to play this thing. Okay, the last example I want to show today. Let's go ahead and go in here. And just to remind people, penny stocks, dangerous penny stocks. I was trading this for several days now, right? So just want to remind people of risk to reward ratio, okay? What am I talking about? Whenever I trade, I want to have at least 2-to-1 risk, 2-to-1 reward to risk ratio. So it's going to be a longer part of the video, but risk to reward ratio, always want at least maybe a 1 to 2 at least. So 1 risk to 2 reward and 1% trading loss per trade. Okay, 1% of account loss per trade. Does that make sense? So even in this example, even though the numbers are really large, let's just make it easy, like a 10% risk to minimum 20% reward because it's such a volatile stock. And then you see we have the 2-to-1 ratio here in the middle. So if I just randomly happen to buy it right here at the start of the market open or right here, that play comes into play. But we had to manage the position sizing. So if somebody has a, let's just say, for example, easy example, $10,000 total account size. And then if somebody's doing a 10% stop loss per trade, but only having a 1% maximum loss per trade, That would equal what? 1%. Just bring out your calculator. Don't even guess it, right? It's 100% prove this. 10,000 times 1% maximum stop loss is you're only risking $100, which for a lot of people is probably too small. But for this example, right? That's the example. That is the 1% maximum risk. So more advanced traders probably do like 2, 3, 4, maybe maximum 5%. But I know some traders, they have a hard 1% loss rule per trade, much larger account size than this. But that is the risk, right? So what am I saying 10% stop loss is you can put on a trade of, let's say, like in this example, $1,000 times 10% stop loss equals $100 maximum risk, right? Bring up the calculator. $1,000 times 10% stop loss is $100 maximum risk. So that's just a very small number example, but that is the correct risk to reward ratio if you're doing 1% maximum loss per trade. And so that significantly changes things in terms of the mindset of I'm not going to put all my maximum account size. Let's say if somebody has a $100,000 account size, this number just changes, right? Everything changes by a factor of 10. So if you have a $100,000 total account size and you do a 10% stop loss on a $10,000 position, you're taking $1,000 maximum risk. So if it's $1 million size, then you're doing 10,000 maximum risk per trade, right? So this is just something to remember. And for me, when I go short, I have to make these numbers smaller because there's intraday leverage and slippage and fees for shorting. So I typically go smaller than that, maybe like cut everything in half in terms of the size. Not 10, 20, I'll do like 5, 10 or something like that. In terms of 5% stop loss, 10% risk reward, and then adjust the position size accordingly like that. Now, one thing I do want to just remind people of is a lot of times in these penny stocks, there are these flash crashes. So this crash, just to give an example, if no one's ever experienced this, because we just lived through this today, is that even though it looks like there's some kind of setup, is breaking news can destroy penny stocks. This was breaking news about a stock offering sell. So this company is going to offer to sell shares to traders and investors. And why does that happen? It happens all the time. This happened on GameStop too, which stopped the rally, crashed it, is because there's such a mega rally that the companies usually say, hey, let's try to sell more shares. And then everyone knows that's a sell news event. So understanding that when we're in the market as a trader, that 5% or 10% can save somebody's life, somebody's account here, right? Or maybe if you do it tighter, just 5%, which would the ATR for this stock today was about like 3%. So this is a huge move to the downside, negative 38%. Ridiculous, right? So just always remember risk to reward, position sizing, maximum loss per trade as dollar risk or percentage risk, but I prefer dollar risk because that's just something I monitor my P&L at the end of the day every week. So percentage works too, dollar risk works too, whatever works for your mind. But let's remember this, everybody. Risk to reward ratio. What is my risk reward per trade? And what's my position size per trade? What's my maximum dollar loss acceptable per trade? And then stick to those numbers in terms of entry, take profit, and stop loss. And it's to protect us against this happening in the market. Happens in crypto, happens in stocks without warning. So let's just remember that, everyone. If you like this video, if you learned something, if you want to support the channel, go ahead and click subscribe, hit that like button, leave a nice comment. And I will try to check it for the next video. Thanks, everyone. Remember, happy trading, but always, above all, risk management. See you in the next video.